Production of oil and natural gas at Whitecap Resources was up in the latest quarter. However, the company did see prices for both commodities drop. Let's bring in Grant Fagerheim, President and CEO of Whitecap Resources. Grant, thanks very much indeed. Maybe we'll put up a 5-year chart for oil as you're talking. So in the latest quarter, you were looking at lower realized prices?
Yeah, I mean, when we look at not just the last quarter, but if we look at year over year from 2023, where you had crude oil prices, that were, quite a bit higher. Realized price after hedge was $95 versus $94.50 on realized crude oil prices. One of the big differences between 23 versus 24, Andrew, was natural gas prices in 2023 were $2.84 per GJ versus the 2024 year at, in essence, $1.56 per MCF. So the big price, and when you look at that on a relative basis, it does affect your netback. But again, these are, on a relative basis, they're very strong pricing. I mean, this is... on the oil side, gas is weaker today. We think with more infrastructure being built out, there's going to be an opportunity for increased revenues and cash flows. But, we have to work within the confines of the pricing environment that we're dealing with of the day.
What is the most important metric for you? Is it WTI, is it Western Canadian Select, or the AECO gas in Alberta?
Yeah, for us, it's really, we're primarily a light oil producer. So it is the WTI price less the MSW price. And then you put the foreign exchange onto it. So when we think about it, in essence, we've got, still in excess of $100 a barrel. We're getting on our product. We're a light oil producer, so the differential, even at $5, with the weak Canadian dollar, gives us a very strong netback.
So you're getting more than $100 a barrel Canadian for your oil?
Yes, we are, prior to royalties. But yeah, we're getting in excess of $100 even today at this particular time.
You had a big deal there this summer. It closed with Pembina Gas, and that put more than $400 million on your balance sheet. So you were happy about that?
Yeah, Pembina have been very good to work with. I mean, they're one of the midstreamers that are, from our perspective, they're advanced thinking. And we were able to monetize a portion of our infrastructure assets and have a combined working relationship going forward as we develop out into our unconventional assets. So it's a very good partnership. They're very good to work with, very collaborative, and we're excited about what we were able to do with them is bringing in a total of just with them, $420 million and another $100 million with Topaz. So $520 million really sets us up as to what we're looking to grow over the next many-year period of time in front of us.
Your yield, let me just check out your yield. What is your policy on that, Grant? Do you like to increase it regularly? Your yield now about 7.3%.
Yeah, I mean, we're on pause right now. I mean, we think our yield is too high. We at this particular time. On a longer term basis, Andrew, what we like to do is grow our dividend commensurate with the growth rate of the company, which is generally between 3 to 8%. The last 2 years, 2024, we grew by 13%, and 2023 was 11%. And we're targeted, right now, we're representing that we're growing by 3 to 5%, but our target is to grow by into the double-digit range. When you put that together with your yield of 7.25%, you're getting returns in excess of 17, 18%, and up to 20%. So we think that's very strong. But that doesn't mean that we are going to jump ahead right today to increase our dividend. What we'd like to do is, grow our dividend commensurate with our growth rate later in the year.
When you say it's too high, what do you mean, Grant? You feel that you're not being rewarded for the dividend fully with a yield above 7%?
That's correct. We would expect, that sustainable producers, sustainable and profitable producers should be trading in the range of somewhere in that 5 to 6%, especially in this interest rate environment. So when we think that it's too high, obviously your share price is not reflective of your long-term sustainability or profitability. So that's what I'm talking about, that it's too high. We'd like to bring that down, but how you bring that down obviously is on the inverse side of that, is increasing your share price.
Grant, I think we'll have to leave it there. Just give us a final thought. We have President Trump in the White House. Do you think we really will see tariffs on oil sales to the United States?
Yeah, you know what? I truly believe that, there is a positioning that President Trump has taken. We have to really think about it. It makes us internalize to focus our domestic and foreign markets, as well as into the U.S., Asia, and Europe. So your question to me, do I think that he proceeds with tariffs? Maybe in the near term, but I think that with sitting down and negotiating and collaborating with the U.S. administration, that we'll be able to understand that we are dealing with one continent. If we're talking about energy security and prosperity, we should look at it as one continent. And we have to think about that from a Canadian-only perspective as well as we advance forward.
Grant, thank you very much indeed.